Hi folks, Nick here, recapping the action from week ending 7-2. Whew, could have been ugly today. All right, so scoreboard for the week ended up red for the indices, but the close on Friday, even though it was mostly red and green, it was way off the lows. This is Friday, what you're looking at: S&P, NASDAQ, Apple, the SPY, which is the same as this one, and this one was the TF. Those are the small caps. They were tested hardest. The small caps were down about 1% at the worst part of the day, and that was a scary moment. And then Apple woke up and rallied, picked everybody up. Did not close green, Apple, but sure came back off the lows to help all the indices. It's a heavyweight. All right, so who closed green? The NASDAQ closed green. This is the NASDAQ right there. Now, in the pre-open, if you look at what happened, it's important. This spike right here, this spike came on the report, the jobs report. It was perceived as bad, even though it wasn't that bad, but it was perceived as bad, and markets wanted to buy that bad news because it just leaves hope that, hey, Yellen is not going to raise rates. But look at how they reacted. As soon as they remembered, uh-oh, we've got Greece on Monday, sold it right back down. That's 2080 almost, folks. That's 2050 almost, folks. That's a big haircut. So all eyes are on Monday reaction. Why? Because then we have to deal with what comes out of Greece. Okay, the good news is that the indices are at prior bounce levels. In other words, I see bounce levels across the last few weeks. Each candle is a week. 2 red weeks to close. 2 red weeks to close S&P, NASDAQ and the Qs, and this is IWM, which are the small caps. 2 red week, but this week comes out of top one, really all-time high, really. So what now? So the reason I mentioned the fact that we rallied on the bad news, because I wanted to know, okay, what would happen headlines aside? Headlines aside, let's assume there's no headlines on Monday. We're going to continue. We should be continuing the meander if left alone, meaning the sideways trade, meaning a couple of weeks they try to run out, they hit resistance, they come back down. For the last few weeks, I'm told you that I'm concentrating on looking at the small caps. That's where the real battle is as far as indices, and I'm focusing on Apple too. But the small caps have been set up bullish for weeks on end, and they've hesitated to break out here. They sold off. They came and attacked hard. They took out the old highs, and then I said last week, you know, this is where the battle was. Remember that? And guess what? The battle fizzled and we fell. Well, now I want to see how they behave on the way down. Will they find footing, or would it be free fall? It can tend to be a free fall. Remember this? They move fast and they move long. And if the markets are down 1%, they tend to move 1.5%, almost 2%, if things are going badly for them, the small caps. It's a basket of 2,000 stocks, basically, on the Russell 2000, for example. So it's important to watch them. So now I want to see how they behave. And to make matters worse, the peek into next week's open interest shows it's easier path down than up for them, especially on the IWM. The RUT, which is also small caps index, shows a big wiggle room, which is bad because then they're either party can move up or down as they want. So it doesn't give us a lot of things to trade. But the IWM shows that it's a lot easier to go down and then up. We're going to need a reason to go up. Which brings me to, okay, we can't say headlines aside. I just said it in order to show you what the ranges are. The S&P range is still the same, stuck at 2100 area, 2080 to 2100 being a magnet, and guess what? It was. And then we have some support below and some resistance above, and that's likely to continue. Same story with the Qs, so I pay attention to one that is not clear, and that's why I focus on the small caps. Apple's important, how Apple behaves. It's important that it finds footing when it's tested, and it did today. It found footing. So those are all good news. So what for next week, I can't say headlines aside, obviously, because there are headlines. And what is it? Okay, let's talk about it. Greece. Greece Monday is going to cause a move in the markets. They're going to vote on the 5th to yes or no. Yes is yes, we bow down to the Eurozone. We accept what they're asking us to do in order for us to get money and stay in the Euro. And no means I side with my government and saying flip the Eurozone finger and walk away from our debt, basically leave the Euro. And it's a binary response. So the direction of the move is unknown. If we get a yes vote, we're likely to rally, and I will not chase that rally. Those rallies are relief rallies. I call them a relief pop because something bad didn't happen. They didn't change something that's going to be bullish to tell me, okay, there's going to be continued buying because they changed something and that something is positive. These are relief rallies, so it's going to be more like a, oh, we dodged a good one here, so let's go have a party for a little bit. So those are hard to follow. You could make some money if you timed it well, but unless you bought today, it's going to be tricky to catch it on the way up on Monday morning. That is if we get a yes vote. If we get a no vote, things are going to be a little chaotic. Why? Because, number one, that's the nature of the beast. No, negative, sell, sell, sell. They're going to ask questions later. To add to it, we don't know how the bond market is going to react and how currencies are going to react. Those two, when they move, obviously rates when I say bond markets, when they move, they cause ripples. They're, the bond market is a lot bigger than the equities. So we tend to react violently, not because they're more right than the equity markets, just because they're attached. So those could cause more chaos on the downside. Again, I will try not to pile in negatively because why? Because as soon as that vote comes out that day, we're going to have to hear from both sides. The Eurozone is going to have to say, okay, now that we see that you voted yes, let's say they vote yes, this is what our plan is for you. You have until blah, 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 blah to pay. So that would be a can kick, and the markets will be happy. If they say no, and the other side will have to say, okay, now that we voted yes, how are you going to help us? If the vote comes out no, then the Eurozone will say, well, you're left with no choice but do X, Y, and Z. I don't know what they are. I'm just saying the bottom line is both sides have to say what's next. So we'll get clarity, some hint as to what can follow. That will determine how deep the sell-off is. If we get nothing that makes sense, if the media does a bad job of relaying what the alternatives are to all the traders that are out there, that's going to make the sell-off deep. If the media comes out and says, or the word gets explained that, okay, now that the no vote came, then the alternatives are either this or that or this and that, and then that gives us something to shoot for. Otherwise, we're just selling for the sake of selling because we don't know what's going on. Let's just all run downhill. So the depth of the sale is goes hand in hand with how they handle the, okay, now that this happened, what can be next? This way, as a trader, I'll decide that what comes next may or may not be scary. Okay, so that'll make the difference between stopping right here or falling all the way down there. I know that the SPY, the bulls will want to defend 205 because they've done it once, twice, 3, 4, 5, 6 times, 7 times, several times. I know they want to defend it again. They won't try to defend it if they have no clue what's going on. They'll say, you know what, I'm going to keep selling until it stops by itself. So next stop from 205 is maybe 204. Next stop below that gets dicey, 200. Okay, so I got to keep these things in mind. All right, so this is these are the possible outcomes and reactions on Monday. Luckily, Europe is going to trade tomorrow, where the U.S. is not. So we may get some, clarity going into the weekend as to what people are really thinking. All right, so anything other than Greece? Of course, we got a ton of things to listen to and to watch for next week. First of all, we got China, right? China has been a real wild trade. And what happens with the wild trades, I mean, you're seeing markets that go up and down 5%, 3%, 4%, 8%, 10% in one day. That is insane. Can you imagine that stuff happening in the U.S. market? That's just too much uncertainty. And this is something that tries to represent the China move, although not, I didn't find it very reliable, just to show you that the market more than doubled and then is giving back 20%, but it still has about 20% left to give back. So there's plenty of potential room downside. The fact that they dropped 20%, that doesn't mean they can't drop another 20%. So China is really important. As soon as the focus shifts from Greece, if we get some sort of resolution on Monday, regardless which way, then the markets will start to try to focus on the things at hand, the things that are more fundamental, still headlines, but more fundamental, like the China thing. China could really affect things. You got Ukraine issues, not so important. Then you got the Fed. You get Fed heads starting to squawk again about raising rates and all that. We know they're going to raise rates. They don't need to tell us every stinking week. So, and people will traders will shift more attention towards, okay, when is the rate going to rise? So we've got Puerto Rico also to worry. So China, Puerto Rico, Feds, bond market, currency moves, we don't know. Ukraine. So all of these and the usual suspects. Then you got ISIS, that's always going on. Oil debacle, down again, down to the mid-50s now almost. So all of these we continue to watch, but we got to kick that can first because they're not going to find the resolution. Hopefully they'll do the right thing. Logic dictates in Greece that everybody concedes a little bit and they find some sort of a solution, or they avoid the the nuclear option. Avoid the nuclear option. Okay, how do you trade it? All right, if Monday we get clarity, then active traders can still try to squeak another weekly trade in for next week. Otherwise, there's no shame of sitting them out. Folks, these are once-in-a-lifetime global events. There's no shame as sitting them out at all. No shame, absolutely none. Just watch. Pop the popcorn and watch. So focus points going to next week. I've told you before that I'm watching the small caps because of the fact that it's been in my focus points and we've been right about it. And then Apple, because it is a leader and I want to see how it finds footing as a leader. And also it's a heavyweight, so it behaves. Other companies would want to behave like it. And also it's actually a heavyweight in the index, so it will move the indices. So those are two important things. They're still top two, aside from the headline, of course. The headline is obviously there. So this is Apple. It's also in the Dow, big box, and the S&P 100 or 500, regardless of how you split it. And then rates, obviously, is how the trade goes on to, I showed you recently that this 10-year rates, as it rises, bond market falls. Rates rise, bond prices fall. And yes, it had a red day today. They were down 1%, but they were up huge yesterday, right? But they're still trading this yellow line. So you can think about it, okay, even if it fell another day, if it bounces off of this, it may go up here and then bounce down here and go up here and then boom, continue on up. And if they continue on up, bonds will continue on down. So if you have long trades in the TLT, which are bonds, you might want to book some profits or hedge a little bit. Because here's what I see, behavior that is head and shoulder-ish in nature, not quite the perfect head and shoulder, but the bottom line, if they lose this rectangle, they can come down to here quickly. That's my opinion. And if Yellen raises rates, that might be the trigger for it. Here are the TNX again, that same pattern I showed you. It hit every technical trigger almost perfectly, and now the next one is up here. Let's see what happens. I'm not calling for it, but this is one of the possibilities, so I got to make room for it. So rates obviously are on the table. Currencies, you don't know what's going on. One day the dollar is up against the euro, the other day it's down. Everybody called for parity. This is a challenging area, and it continues on to be a challenging area because They fell and they stopped here and they fell harder. They came back to it, and guess what? Prior support became resistance, and now it's resistance again. If it comes down here, let me extend this one actually. This is the FXE. This is the euro against the dollar. So if this rises, the euro is stronger versus the dollar. If this goes to 100, that's what they call parity, basically. And so if we fall to here, I think there's a chance we fall to here. So I'm going to put a line potentially that, you know, I'll know that'll lead to here, that we spoke about it. That's currencies. How that affects the trades has been inconsistent. One day they tell you the dollar strong is bad for markets, and but the next day they say the market behaves exactly the opposite. So it's basically, that's perfect. Transition into my next point, which has been ongoing all year. What is it? The lack of conviction. Nobody has conviction. The bulls have hit the all-time high so many times that they don't have the conviction to walk through the door. And the bears are not even playing. The bears are not there. We get days like today. I mean, the bears should have been hammering down on the bulls, and they don't. They're just not playing. And then the China, you know, their easy potential downside. The China chart I shared with you the other day. There's still a lot of froth that can be priced out. Year to date, not year to date, last 12 months moves are insane. Actually, year to date is insane. So the ranges are still the same. I will post the official ranges before the Monday open. Anything I saw today that I shared with you as far as ranges is based on the action without today, based on the data without today. That doesn't become available until the Monday before the open. So that's why I delay sharing that information until then. All right. That doesn't mean we don't have visibility. It just means that I can't guarantee you that today's price action in the markets didn't change people's minds and setups going into next week. As it is right now, these small caps have the easier way down than up. They're going to need a real good reason to retake the highs. That's my opinion. And it's easier path down. Apple still finds the same resistance and some support, same levels of support. Let's go into here. Apple. It's you see it's trading along this ascending channel. It was ping-ponging between the two upper white lines, and now it's a little below it, but not too far below it. So I think it can maintain this ping-pong. Even at the worst-case scenario, we're talking low 20s where it finds support. And Google continues to be mired in a range-bound trade. Look at that, sideways. It has resistance, clear resistance, if I remember from you know, just mentally. It's 555 and up. I'm going to say 560 showed a little stronger resistance going into next week. But it also shows some support down to the 20s, but not a lot below that. So if they lose their footing, they can slide hard. Let's see the Qs. Those are the NASDAQ. They still have a decent range, but again, not formidable support. Strong support, but then if you lose the immediate support below you, boom, you're going to lose footing there, just like Google. So vulnerable is what I'm saying. The S&P is also vulnerable, but has a strong willingness to fight for the 205, which is basically, if you think about it, dirty math, the 2050 in the SPX, and that also shows still conviction in at least they want to defend that line. So let's see if they can. And if that fails, the 2025 is also somewhat decent. Technically, a lot of technical analysts are calling for a possibility of some crazy setups. Technically, you can make an argument for a 2025 move of an SPX sooner rather than later. So keep that in mind. So those are the ranges. I did share them with you. If you have any questions, please let me know. There are a few tickers we need to talk about. We can't pass the day without talking about Tesla. You know I don't like that stock, and but I'm not in it or short it anymore. Formidable move today on good reports. I mean, this is a move on actual fundamentals, good sales report, and I think people overdid it though. Look at that. People have been stuck in that stock for a year almost at losses. Everybody that entered, look at the volumes, how high they are when compared on the way up. So all these people bought on the way up, especially this last batch. and then all these people the volume is a lot lower. You know what I mean? So I guess what I'm saying is there might be a whole bunch of people stuck up here that once price comes close to break even, they're going to say, thank you, Lord, and boom, get out. I know a personal friend, and she bought at 290, and I told her to get out if it comes anywhere close to 290. And guess what? Today it did. I think it hit 284, 85 or something. It is a perfect, not a perfect doji. It is a doji. Look, I can hide my cursor right behind it. Why? Because they opened up, they gapped up, and they opened, and then they ran, they tried to sell it, and then they closed where they opened, so they're indecisive as to how to treat it, but it was a bullish move. Oh, but I mean, it's up 4% on a questionable day. Yeah, so a bullish day. Oh, I was looking to see what the high was. Where is it? 282.5 almost. So that's a pretty high. And so that's Tesla. The opposite of the Tesla story, unfortunately, is Yup, Miranda. Oh my goodness, down. I think they were down 12% at one point. They ended up the day down 10% almost exactly, because they decided to say, you know what, we're not going to sell ourselves after all. They reported, look, they report, they get punished. They report, they get punished. They report, they get punished, and then they say, you know what, maybe we want to sell our company. Boom, goes through the roof. Bam, price it all out. Let me zoom out. You see a lot of markings on that, although I don't trade it. This is a 5-year chart. I posted a whole bunch of stuff that almost all of it came exactly true, but most importantly, months ago, I noted that, okay, there might be a head and shoulder area with a neckline where it's like a wide neckline like I do, because it's not an exact science. I said there was a zone 2, a lot of action, zone 1, transitioning zone, but but there was no conviction up here. They didn't trade long. It's like tick, 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 tick. So anyway, it had a spirit of a head and shoulders, and I drew this line right there, that orange line. Excuse me. And look at the candle rested exactly on that orange line. So it warned. Not that I was a genius finding it. It warned. So I would have stopped myself from going in and chasing, and I would have stopped myself from, I would have booked profit if I was green. So Yelp was a story. Oh, side story to Yelp, Google today outperformed. It was even green when the markets were red this morning, and I think, not this morning, midday, and I think it's because people had assumed that, okay, Google might be one of the potential buyers, and given that it's no longer be a potential buyer of Yelp, they liked that news, so they bought up Google. That's my interpretation. Also, somebody mentioned the WWE. I can't believe I'm doing this. That is the Worldwide Wrestling Federation or something, whatever, entertainment. They said they wanted to buy calls. I said, what for? I don't know if they have information. Based on the stock chart, it has a potential of being down here rather than up here, unless you know something I don't. So technically speaking, not fundamentally speaking, I know nothing about them. It doesn't look that appetizing to go long. So having said that, again, it's not a shame to actually sit out these events. These are wild and wild, once-in-a-lifetime global events that we're lucky to be living through them. And as far as portfolios are concerned, I always make sure that it's somewhat balanced, meaning that if we drop 2 or 3%, I should have some greens coming in from some shorts that I have. And if we rally up 1 or 2%, I should have some green from some longs I have. That's a well-balanced portfolio. All right, folks, I'm going to sign off here. If you have any questions, please don't hesitate to ask.